ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, everyone, it is midweek already, and welcome to the Currency Call, and welcome back to everyone in the LCMS Traders Club that is making the call today. We appreciate all that, and there was quite a lot of activity in the LCMS Trading Club chat last night as well. A little bit going on with Jerome Powell testimony at 11 o'clock last night. We will have a summary with Gim here as well later in the call, but just to get things going, we do have an introduction just for anyone that is new and is wondering what is going on. This is the daily currency call presented by Forex Trading Asia, and we look at the currencies every Monday to Friday at 11 a.m. GMT +8, and we start the week off with Aussie and Kiwi for Monday. Tuesday we've got the Euro, Wednesday the Pound, Thursday Yen and Gold, and then Friday we've got the USD CAD, we've got oil, and we've also got cryptocurrency as well. And in the currency calls, we look into the breaking news analysis. We go over the chart analysis for the pairs in focus. We do a little bit of Q&A as well. When people are asking questions, we'll endeavor to answer those. And then we also discuss the structure of the trade ideas as well, offering stop loss positioning and also take profits too. So just before we do get into the call, I'll just share the disclaimer here for anything that is mentioned in the call regarding trades. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers, so please remember to do your own analysis prior to entering into any trades. So just to get things kicked off, like I mentioned just before, we do have the analysis of what Jerome Powell did say in his testimony to the US Congress last night. So just to kick us off, we've got Gim Hong here to discuss that testimony. So over to you now, Gimmy.
All right, thanks, Scott. Happy midweek, everyone. Okay. So, well, nothing new coming from the Fed Chairman Powell last night. Okay, basically he reiterated, the plans that the Federal Reserve have. All right. Well, the only surprise that we had already taken recently, right? During the release of the minutes, we realized that the Federal Reserve was actually, the committee members, they were actually discussing on unloading the bonds. Okay. So during the testimony yesterday, before the Senate, all right, well, now we have three components, okay, to focus on. The first component on interest rate hike, okay. Well, why not let's just start with tapering, okay. The first component being tapering. Jerome Powell actually said that the QE will likely end in March. Okay, that's provided everything, Omicron, everything COVID related is smooth sailing. Okay, and there's no, further deterioration of things like that. Then QE will likely end in March. Okay, although there may be some speculations out there, okay, in the market that they may actually pick up pace. If they were to pick up pace, I don't know what's going to happen. Like, QE may actually end this month or maybe next month, during the upcoming central banks meeting, right? But as of right now, I would say March is pretty much the fair game kind of a timeline, okay, for the Federal Reserve to end its QE, right? So at the moment, for the month of January, they are purchasing bonds at $60 billion, okay, for the month of January. And then for the month of February, they will taper it down to 30, okay? So they'll be purchasing bonds at $30 billion per month for the month of February. And then comes March, okay? They will purchase 0, okay? Hence, QE ends in March, all right? So that's the first component, QE. Second component, okay, being the interest rate hike. Because the QE is going to be ending, okay, in March, Jerome Powell says that we can actually expect a series of rate hikes this year, a series. Okay, so it's no longer one. So I wouldn't be surprised if he's one of them who actually project 3 rate hikes this year, or at least 2. Okay, and if you guys remember, yesterday, just before Powell's testimony, 2 of the Federal Reserve committee members, Loretta Mester and I think the other person is, I can't remember what's his name. Let me just do a quick search. Okay, Mester and George. Okay, Mester and George. Well, as expected, okay, I think they actually voted. I was actually watching on Bloomberg TV when the Mesters interview took place. Okay, and she actually mentioned that she's expecting 3 rate hikes in 2022. Okay, so yeah, she's one of them who actually projected 3 rate hikes this year. So nothing much coming out from them. All right, it's basically just inflation is running hot. We need to tame inflation down. We need to hike interest rates to actually bring down inflation and things like that. Things that we already know. Okay, from the December meeting. All right, so that is the second component. Interest rate hike. Okay, now the third and newly added component since last week when the minutes was being released, okay, is the unloading of bonds. Okay, so you guys will be hearing this term more and more frequently from now on. Balance sheet. Okay, so balance sheet is basically referring to the amount of bonds that the Federal Reserve is currently holding. Okay, because remember, when they run QE, they are actually buying bonds, right? When they run QE, they are actually buying bonds. So across a few years already, okay, and as of now, they have accumulated close to $9 trillion worth of bonds. 9 trillion, close to 9 trillion. All right, that's the amount that they are, currently holding. Okay, and they cannot be holding it forever. Okay, they have to sell it back to the market. And someone was asking, how are they going to sell it back? Are they going to do it? Who's going to buy? I personally don't know who's going to buy. Okay, they're going to sell it back to the market, and the market will probably, the banks, the major institutions, they are probably going to just break it down into pieces, make it viable for purchasable for the retail traders or retail bond buyers and things like that. All right, so those details are not crucial in our analysis of how US dollar will be moving, okay, in accordance to how the Federal Reserve will move its monetary policy. Okay, but the main thing here is, okay, the Federal Reserve will have to at some time sell back the bonds. Okay, and this process, okay, is often called the running off of balance sheets. Okay, and Jerome Powell, during his testimony, okay, actually mentioned that the central bank may actually start this whole balance sheet running off this year. Okay, and another point that he made is that unlike the previous round of balance sheets runoff, okay, which is, I think, pertaining to the 2008 financial crisis, okay, I think they started unloading several years later from 2008, all right, after the financial crisis actually sort of like recovered to a certain level. Okay, so the one point that he made is, unlike the previous round of unloading of bonds, this balance sheet runoff, okay, this time round, okay, the timeline, okay, the amount of time between interest rate hike and the start of balance sheet runoff, okay, will be shorter. Okay, meaning previously, from the point of time whereby they start increasing interest rates to the time when they actually start to unload bonds, it may be, for example, it may be 1 year. Okay, but right now, because the situation is very, very different, okay, inflation is close to 40-year high already. Okay, they are in need to actually unload back the bonds and things like that. Okay, hence the duration may very well be shorter than the example that I gave, 1 year. Okay, maybe 6 months, maybe 8 months. But basically, the point I'm trying to make here is, expect a faster unloading of the bonds to start this time around. Okay, so we can expect bonds unloading, we can expect balance sheet to run off this year. And then the second point, okay, from now on, okay, we know that QE is going to end in March. Okay, and we know that interest rate is going to be, interest rate hike is going to start this year. we have a new concern, we have a new focus right now, and that is the pace of bonds unloading. Okay, at what rate will the Federal Reserve be selling back the bonds into the market? Okay, why is it crucial, to take note of this? It's because, okay, let's give an example. Let's look at the extreme case whereby the Federal Reserve actually sell back all $9 trillion worth of bonds into the market. Okay, now pay attention to this. Okay, keep in mind that the Federal Reserve, when they actually buy bonds, they are actually providing liquidity to the market. Okay, they are actually supporting the market. So if they were to actually sell back all $9 trillion worth of bonds, okay, back in the market, that means they are no longer supporting the market. Okay, hence they may actually be a major knee-jerk reaction. Okay, a big knee-jerk reaction, or it may even cause I don't know, some catastrophe in the market and things like that. Okay, now I think I read this example, this analogy somewhere. Okay, this analogy may help you guys in understanding this whole the impact of selling back the bonds at a very high rate. Okay, now imagine this. Okay, Warren Buffett is actually a major shareholder of Coca-Cola, right? Think of it this way. Right now, if we were to hold on to some Coca-Cola shares, okay, and right now there's an announcement being made by Berkshire Hathaway, okay, Warren Buffett's company, that says that he's going to sell back all of his shares, okay, into the market. By now, you guys can actually imagine, what's going to happen to the market, what's going to happen to Coca-Cola share, right? It's likely going to cause a big price rundown and things like that. Okay, it's going to be big price movements in Coca-Cola, right? So it's similar in the case of the Federal Reserve's unloading of bonds. Okay, if they were to unload all their bonds at one go, okay, or maybe at a very, very, very high pace, okay, I don't know how much, maybe like $50 billion or $100 billion per month or things like that, okay, however they deemed high, okay, then there's a tendency that the market will be, I don't know, there's going to be like some chaos going on in the market, okay, because the Federal Reserve is like stopping this whole support that it's been providing for years. Okay, so that is what we want to pay attention to, the pace of the Federal Reserve's unloading of its bonds at the moment. Okay, so 3 points, right? On rate hike, on tapering, and on balance sheet. This is what these 3 points are what the Fed Chairman Powell has actually highlighted yesterday. Okay, so he did comment on inflation. Okay, I have to say he did comment on inflation. The first one is actually pertaining to more interest rate hikes. Okay, I quote, "If we see inflation persisting at high levels longer than expected, then if we have to raise interest rate more over time, we will." Okay, so I guess this statement over here simply sums it up, right? We can actually expect more than 3 rate hikes, okay, if inflation were to go crazy high, okay, 50-year high, 60-year high, and things like that, right? So, the Federal Reserve is now open to more rate hikes. So I guess 3 from now on, it's probably like an expected value, is expected number, okay, expected number of rate hikes, okay? Now, the second comment that he made is pertaining to one of its dual mandate, okay, one of the Fed's dual mandate, which is the maximum employment goal, okay? I quote, "At the moment, we need to pay more attention to inflation than to the maximum employment goal." Okay, the Fed has this dual mandate: maximum employment goal, okay, pertaining to employment, and price stability pertaining to inflation. Right now, it's clear, okay, it's clear, Jerome Powell has already made a statement saying that we are going to place more priority on inflation, on our inflation mandate over our employment mandate, okay? And with that, I will bring it over to what's coming up tonight or later, okay, at 2130 GMT plus 8, the US CPI data release, okay? as of the last release, okay, as of the most recent release, okay, inflation is close to 40-year high. This time around, okay, inflation is still expected to rise, and on the annual basis, okay, it's actually expected to rise to a 40-year high, okay, not close, but 40-year high. If the result were to turn out as expected or even higher, which simply makes things worse, okay, then yes, we pretty much, what do you call that? Secure a 40-year high inflation in the US, okay? So if you guys are trading, are looking for trade opportunities and things like that, later on today at 2130 GMT plus 8, pay attention to the inflation data, okay? And keep in mind, okay, Traders Club members only, all right, there will be a session tonight. I will be going through, like I've mentioned, okay, charts at a lower time frame, specifically H1, okay? Now, because of this inflation data, okay, I may not be so long-winded tonight, okay? I may want to end the call slightly earlier, okay, to give you guys the time to prepare for yourself and things like that. But, okay, to prepare you guys for the charts and things like that, I will look through all 28 charts, although it's US only, okay? I will go through all 28 charts and see what are the, better, I would say, better trade opportunities out there that you guys can consider, okay? And to provide you guys with the fundamentals and support to give you guys the conviction to enter the trades, all right? So please, Traders Club members, join the call tonight. I'll prepare you guys for the US CPI data release, okay? And then also remember, later on today at 2300 GMT plus 8, Leah Brainard, okay, one of the FOMC committee members, will be testifying, okay, after Paul's testimony yesterday. She will be testifying. Why is that the case? Because she is the nominated vice chairman for the Federal Reserve, okay? Unlikely it's going to cause any movements in US dollar, okay? Unlikely because, well, I mean, she's going to be nominated as the vice chairman, likely the set of questions that the Senate have asked Jerome Powell will be asked to Brainard, okay? And I mean, we pretty much have CPI to be concerned about, all right? So trading opportunities wise, focus on 2130 GMT plus 8. But nonetheless, if she actually highlights anything major or, make any, I don't know, verbal remarks and things like that, I will update you guys again tomorrow, okay? So any questions on this? I think more questions will be coming in tonight at 213, well, during the Traders Club Monday night call, okay? What questions do we have? Look forward to it. Yep, Paul, you can sure look forward to it. I look forward to 2130 GMT plus 8 as well, okay? So if there's no questions for now, I will hand it over to Scott for his analysis on dollar index. Back to you, Scott.
All right, thanks, Gimme, for that. And that's it, guys. Just again, a reminder, 8 o'clock this evening, GMT plus 8. Definitely one to catch in the lead up to what's going to be, highly price sensitive release with the US inflation. So we've got the US dollar index chart up here, 4-hour time frame, and a couple points to note. We've got a very close to a test here of the 95.50 level of support. And then really what we could see is a break lower. It does look like, just with the price action, that it is looking quite weak. Just with those comments from Jerome Powell, the equity market did take that as pretty supportive, and it has bounced a little. We'll have to wait and see what happens this evening, though. It's been quite an interesting set of events, because we've had the reaction from the markets, and now we've got tonight as well. So what we are most likely to see is quite a lot of volatility, but I wouldn't be too fixated on this level. We might see a dip down. We've seen bounces before in the 95.40s to 30s. So we potentially could see a little bit of a dip here, just simply because there's not a lot of catalysts at all in play until this evening. So what can tend to happen is we've got this downward momentum. If we don't really see much of a bounce here at 95.50, we could really see it, weakening further. And then obviously in the lead up to when we have the call at 8 o'clock, what we have been seeing is the market has actually been running where things are expected to go, where we might, think that it's going to be bullish. So the market will run in the lead up to the actual news event and then become very unsettled right after it if things are not too clear. Although, unlike Fridays with NFP that have been hard to sort of trade, we've got 2 news releases and it's a little more simplistic. So we do see it beat expectations. That's very significant, 40-year high. So that's something to pay attention to. But let's say if it doesn't, then be flexible in your thinking, and we might see the index break down a little bit lower, again, because it's unexpected that inflation has slowed down, because we are hearing, obviously, with the news that's reporting on things is that everything is getting more expensive in the US. So especially with those supply shortages and people with, the coronavirus, and it's still spreading in the US, and it adds to complexities with what we have been seeing with supply issue concerns. So I would say just be flexible. It's, right now with the lack of a catalyst, it is difficult to say we're going to see a bounce. I want to really see it actually break below and then see if it can get back over after the release. And that would be my thought process based on what we've been seeing in the other pairs as well, because we do have the pound against the US dollar today. We've also got the euro pound, but a nice way to be fresh in your mind is to catch that 8 o'clock call this evening as well. But just to take it over now, Gimme will go through the pound against the US dollar and also the euro pound, and I'll be sharing the trade ideas as well. So back to you, Gimme.
All right, let's take a look at pound dollar. This is not pound dollar. Let's get GBP USD. Okay, pound dollar, pretty interesting. All right, it has been rallying since 21st of December. Okay, bounced off my support of 1.32, and right now it's in the resistance of 1.363. Okay, so at the moment, it's actually testing to break above, all right, this resistance zone, all right. My view, okay, I'll look for buying opportunities, okay. Let me head over to H4 time frame. So, pretty straightforward, I would say, okay, pound has been pretty bullish against the US dollar. As I already mentioned too many times already, okay, with the most recent interest rate hike from the Bank of England, and more to come, all right, in, I don't know, in the next few meetings, I hope, we can expect as well, okay. Bank of England is probably more hawkish when it comes to monetary policy at the same time, as opposed to, as compared to the US Federal Reserve, okay. So I'll be looking for buying opportunities at 1.366, which is around here, 1.366, okay. And then my stop loss, okay, will be placed at 1.36, which is here. I should just change the color a bit. Where is it? So it's gonna be pretty short term, I would say, okay. And because there's this US CPI data as well, okay. So you guys may not want to hold, if this trade were to get triggered later on, okay, you guys may not want to hold this trade until it hits this the take profit level at 1.378, which is around here, okay, just before the next resistance of 1.382, okay, in the event whereby it breaks the current resistance of 1.363, okay. So this is a 1:2 risk reward, okay, 60 pips for stop loss, 120 pips for take profit, okay. That is if the pound dollar actually breaks the resistance zone of 1.363. Now, what about, if it doesn't break above the resistance zone, okay? What if it actually bounced off, come back down, right, from this resistance level? Then I'll be looking for a short-term entry, okay? You can actually look for a short-term sell at 1.358. Let me just shift this line because it's it's going to get too confusing if there are too many lines here. Okay, so 1.358 will be a sell entry. Okay, because this is a counter trend trade, and you know the uptrend is very, very strong. Okay, I wouldn't suggest taking up this trade. Okay, but if for some reason, okay, pound to weaken, anything can happen, right? It can be, Brexit talks back in action and things like that. Remember the whole Brexit talks, the whole fishing issues between the UK and France has not been resolved yet, all right? And of course, adding on to it, there's tons of customs related issues and things like that hasn't been resolved. Okay, right now everyone is just busy with this whole Omicron, Delta Cron, and some other new Cron variant coming up and things like that. All right, so everyone's too busy to talk about Brexit and things like that. But in a scenario whereby some new developments would come out from Brexit and things like that, it may actually weaken pound. All right, and in that scenario, we can actually look for a sell trade at 1.358 only, okay, after it breaks below the 1.36 key level, because it's very close to the resistance of 1.363. I would be on the safe side to wait for a solid rejection of the resistance before looking for selling opportunities. Now, as for your stop loss and TP, okay, what I have in mind is actually pretty wide. Okay, what I have in mind right now is a stop loss at 1.365, which is, as you guys would have expected, above this resistance zone, which is around here. I'm trying to get it at 1.365. Okay, take profit, okay, potential take profit would be at 1.344, which is slightly above this resistance, this support zone, okay, over here. Now, keep in mind, I use the word potential, okay, and I already said that this is a counter trend trade. So you guys may want to keep it short term, and if it in the scenario whereby it keeps moving downwards, okay, then just close your trade for your profits, and then look for new entries and things like that. But that is the potential take profit level, and 1.365 is the stop loss. So stop loss will be at 70 pips, take profit will be at 140 pips. Although this is a 1:2 risk reward, but still, yeah, keep your trade short term. And you guys can actually, okay, if you guys want to keep your stop loss smaller, tighter, okay, because you guys want to do it short term, then another suggestion for stop loss would be 1.361. Okay, that will be a 30 pips stop loss. Okay, it's very similar to, it's actually something like the trade signals that we fired out, okay, whereby we have a 30 pip stop loss. All right, that will be I would say a short term enough kind of trade to last until the US CPI release at 2130 later today. Okay, and that is probably something that most of you would prefer, rather than the 70 pip stop loss. Okay, so yeah, take profit wise, it's still at a potential level of 1.344. Okay, so that is for pound dollar. I would prefer to look for buying opportunities over selling, okay, because of the trend following against the, as opposed to the counter trend setup over here. All right. Now, yesterday I covered the euro pound. Today, as usual, I would like to go back and take a look at it since we are talking about pound, right? So yesterday, okay, my suggestion was to look for selling opportunities at 0.833. Okay, as you guys can see over here, let me just go over to the daily time frame. Okay, so yesterday, as indicated by this dotted line over here, the 0.833 trade idea has already been triggered. Okay, the sell has already been triggered, but then it actually, the close of the day, it actually bounced back up, retraced, and right now it looks like it's coming down. Okay, but it's pretty much like stagnated around the entry level. Okay, so some of you, for those of you who have entered the trade, you guys may be wondering, is this trade idea still valid? The answer is yes. Okay, the answer is yes, because pound is right now, it's going to be more bullish than euro. Okay, because of the hawkish more hawkish tone from the Bank of England than the ECB. Okay, that's one thing. And then trend-wise, you can see that over here, just draw a trend line over here. Okay, you guys can see that it has been a strong downtrend for Euro Pound. Okay, and it has already broken my support of 0.84. All right, and if we were to head back down to H4, okay, we may get a clearer picture. And you can see over here, yes, it has, it has been ranging across, like I mentioned yesterday. Hence, look for selling opportunities only when it breaks below the 0.833 level. Okay, and right now, yeah, it looks like it's just stagnating and things like that. We'll see how it goes. Okay, we'll see how this trade idea goes. The potential take profit level is at 0.812. Okay, but please try not to hold until 0.812. All right, I mean, this 0.812 is set there so that, in case you guys are busy, you guys don't have time to tune in to the chart, look at the chart and things like that. And, who knows what news may come out from the ECB, from the Bank of England, or even from the British government, okay, in terms of Brexit and things like that. Okay, in a scenario, for example, I'm just giving an example. Okay, if let's say, there has been if let's say there's a conclusion, okay, on the Brexit fishing issue, ongoing issue, then we will definitely be seeing a strengthening of the British pound, okay, against the euro. All right, and then it may actually shoot down. It may actually, plunge. Euro pound may actually take a strong plunge downwards and things like that. And then, because you guys have a potential take profit level set at 0.833, okay, 0.812, sorry, 0.812, okay, it may actually hit, okay? So that's the whole point of, setting your take profit, just before your stop loss or your resistance, before your support or your resistance zone, okay? That will, in case when you come back to your charts and things like that, you will realize that it has actually come close to it, or it has actually hit your profit level, profit target, okay? So that's for Euro Pound. At the moment, I'm still, this trade idea is still valid. If you guys did not enter this trade yesterday, you guys can continue to look for selling opportunities of the Euro Pound. As to whether or not the US CPI will have an impact on Euro Pound, unlikely it's going to have an impact on the Euro Pound. Okay, pound dollar, Euro dollar, yes, but Euro Pound, unlikely. All right. So with that, do you guys have any questions on? Yes, the close from yesterday was 0.8332. A break of that will be a sell for sure. Correct. That's right, Gary. Okay, so if there's no questions on the trade ideas and for Paul Wow's testimony, okay, I will see most of you guys tonight, okay, at 8 GMT plus 8 during our call, okay, and I'll be sharing, potential trade ideas for the US CPI release at 2130. Okay, with that, I will hand it back to Scott.
All right, thanks, Gimme. I've shared the trade ideas as well, but again, a nice little review will be done tonight on the 8 o'clock call. So I hope to see everyone here as well, just to do a bit of a recap on what has been going on. And thanks again for everyone that joined the call, and make sure you visit the Jindal Thai website if you're watching this on YouTube and you'd like to join the LCMS Traders Club as well. All right, thank you everyone, and see you tonight. Bye for now.